What happens when an investment bank disappears? That was the question facing the financial world a year ago as Credit Suisse collapsed into the arms of its Swiss rival UBS. In the following 12 months, the big beast of the investment banking jungle carved up Credit Suisse's carcass, carrying off its employees, its clients, and its assets. UBS doubtless got the best bits. It paid just 3 billion Swiss francs to absorb its arch-rival, becoming the world's dominant bank catering to wealthy clients outside the US. It doubled its market share in Switzerland, where it's now responsible for about a quarter of all loans, and it is slashing costs. CEO Sergio Motti plans to cut $13 billion from the bank's combined expenses. UBS picked off some juicy morsels from Credit Suisse's investment bank too, particularly teams of deals makers in the United States. But others got in on the action. Banco Santander of Spain has picked up 200 bankers in the US, including several senior Credit Suisse executives, while Deutsche Bank and boutique firms like Moelis have also added to their ranks. The real feeding frenzy, however, has been in Credit Suisse's trading activities, particularly the capital-intensive businesses of structuring and trading fixed income securities, much of which UBS did not want. Credit Suisse had already closed its prime brokerage business, which catered to hedge funds, and last year it sold its securitized products unit, which packages loans and sells them as securities to Apollo Capital Management. With it went $37 billion in assets and about 200 people. In most industries, when a competitor disappears, the surviving businesses should face less competition and therefore be more profitable. But it's hard to tell whether that's happened here because Credit Suisse's collapse coincided with a slump in activity. The hope is that when business picks up, the survivors will be bigger and stronger. But the reality is more complicated. The investment banking activity periodically attracts ambitious institutions eager to elbow their way to the top table. If one erratic competitor replaces another, the big beasts of finance may find themselves just as hungry as before.